Okay, folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond, and what we're going to go over today is some commentary from last week. I discussed with members about the inflation numbers that the government was putting out and how the market was sending us signals vis-a-vis the price action of the TIPS, the Treasury Inflation Protected Securities. For those of you young hotshot traders out there that really don't care about the TIPS, they are critical. If you care about knowing technical analysis, learning how to trade these markets using the charts, you must be like a detective and appreciate the value that the chart of the TIPS brings to the table at times. I'm going to play for you a recording of what I shared with members on last week's The Week Ahead commentary. But first, let's do a rundown of what I'm going to go over today. We're going to segue through my comments with regard to last week's Fed announcement, inflation, and the chip market. Then we're going to talk about our best stock charts for the coming week. But first, I'd ask you to please click that subscribe button, get all my best stock charts that I put out, as well as my weekday morning commentary called Swing Trading Today. That's put out before the markets are open. And I talk about the pre-market activity in the futures market. So let's begin with the inflation numbers and the tip markets. And here's what I had to say to members last week on the Week Ahead commentary. Expectations by a mile. Now, here's where things get a little bit dicey because the believability of these numbers is becoming more and more hard to digest. Producer price index, which they stated the prior month came out negative. Prices actually went down for producers, if you could believe that. The number came out half of what was expected. And when you jump to the CPI data, which was actually released the day before, it came out half of what was expected. And I shared with you last week, and I talked about it yesterday on Best Stock Charts, the data released by Nomura Securities and Bloomberg, their analysis of inflation over a 10-year and 20-year period shows that housing costs alone are outpacing wage growth. And when I look at that chart or those charts and I look at the data that's being released by the federal government, I'm finding it very, very difficult to fit a round peg into a square hole. It just doesn't make sense. And when you take a look at the TIPS market, which we're going to take a look at again in a moment, it's not supporting the government numbers. The TIPS, a major breakout last week. We are at highs not seen since 2013. When you take a look at a monthly view, you're seeing a massive cup with handle formation. We are breaking out. Now, the question I'll pose is, if the government numbers are accurate, why then are TIPS breaking out to highs not seen since April of 2013? Why is there a bid under these bonds if there is no inflation or the threat of inflation? The VIX, a major breakdown last week. It appears as though we are going lower here. Okay, so I mentioned last week to members that the tip market was breaking out to highs not seen since 2013. That's no longer the case. That's gone now. What happened last week is that we broke out to highs not seen ever. You're looking at a monthly chart now of the TIPS. So let's stop here for a moment. Let's think about what happened last week. Remember, I just played for you a clip about how the government numbers were reporting that the producer price index the prior month came out negative. Prices actually went down for producers, if you could believe that. And core CPI, where they conveniently back out food and energy, that came in only half of what was expected. Yet, the tip market is pressing to new all-time highs. Why? The question is, it's phony math. The government numbers are wrong. And what the Federal Reserve is going to do in the face of a weakening economy, and they acknowledged it last week, while still growing, the economy is weakening. What they're going to do is they're going to allow inflation to rise, to keep the economy from going into recession. It's too late. The bond market is already telling you that. How do I know? You have an inversion of the yield curve. This is 2s versus 10s, but you have 2s versus 5s. They've been negative. And the monthly chart of the yield curve, we are breaking down to new monthly lows. We had a dead cat bounce. We are now at the lows of the month. We have taken out the lows of February and January. The low of December was 0.11, the spread between 2s and 10s. We're 2 bips away from it. So the market is sending you signals that all is not right with this economy. You had yields that crashed last week on the 10-year yield. Bonds are ripping through the ceiling. I ran a screen this morning for stocks to talk about today that were looking strong. They were breaking out. They were overbought, quote unquote. And all that littered my screen were bond funds. So today we're going to be talking about shorts, folks. So how did we do last week? With all this knowledge at our disposal, all the analysis that we've been doing of the charts, how did we do last week? Let's do a rundown. We were long of the gold stocks. They closed up on the week. We went short of the small caps immediately following the Fed announcement. That is now a profitable trade. Our short of Dish Networks is working. They are breaking down. We're looking to add more to that trade this coming week. Members will talk about Dish Networks tomorrow on the week ahead commentary. Now, did all of our positions do well last week? No. I was disappointed with the emerging markets trade that we have on. It traded in sympathy with the markets and because the U.S. dollar rallied. I do not believe that the dollar rally is for real. The only thing that may change my opinion is if we see a hard Brexit. Let's get to the charts. All right, the first set of symbols we're going to review today are continuation breakdown trades. And then we're going to segue over and into extreme oversold trades. When I'm bearish on the market, I don't like playing momentum plays. What I like to do is trade extreme oversold trades because my risk reward is far more favorable and far more manageable. So we'll talk about that in a moment. We'll go over the first 2 symbols here, ROKU and Walgreens Boots. These charts, we're going to review weekly charts. Now, members, if you're watching this, I'm going to go into all of these charts again tomorrow on the week ahead commentary, but we're going to do a deep dive. Right now, I'm going to do a cursory overview of these symbols on a weekly basis on the continuation breakdown trades, then on a daily basis on the extreme oversold trades, to just show visitors who aren't currently members why we like these trades. And then tomorrow, we're going to do a deep dive into our strategy for entering these positions if we decide to do so. So let's kick things off with ROKU weekly chart. Take note of the fact that this high level view using a weekly chart, we have a probability of a double top and a lower high on ROKU. We are just barely holding on to this lower band of support. The uptrend is still intact, but it is under a lot of pressure. The prior week, we had an outside reversal week, which is very bearish. We engulfed the prior week's move. Surprised that we did not break down to new lower lows on ROKU, but I think that's probably what's going to happen this coming week. So members, we'll talk about the daily chart tomorrow as well as the weekly chart on the week ahead commentary coming out on Sunday. The next chart up, weekly chart, Walgreens Boots. Last week, we had a bearish key reversal. So what we're going to be looking to do here is to open up a position short of WBA. Then once we begin to retest these support levels here, we'll look to add to that short trade leaning into it. And I will put my profit targets and stop loss targets on the watch list in the members area. So members, check that out tomorrow for all of these symbols. AutoNation, I spoke about AutoNation last week. I fully admitted I was talking out of both sides of my mouth. I was looking for a break of the December lows, but I said, you know what? We may just rally here because we're retesting a critical support level, because if this breaks, if it does not hold the 3287 level, we will probably see program selling this coming week. It did not happen. We gapped up, but we did close well off the highs of the week. So what we need to do here is update this chart because the market sent us a signal last week and we want to memorialize that signal on our chart. So we take our crayon out, draw a resistance level because the market told us we have sellers up here. So what I'm looking for here, and members, we'll talk about the daily chart tomorrow. What I'm looking at here is a continuation break below the lows of March. Actually, we did break down below the December lows by a few pennies. So if we break down to new monthly lows, it's all over here for AutoNation for a while anyway. Now what I want to do is I want to segue over into our extreme oversold stocks. And some of you who are new to my channel and new to my analysis, you may be saying, my God, this guy likes to catch a falling knife. Nothing could be further from the truth. I use a system, it's called multi-period charting, meaning I just don't rely upon one view of a symbol, meaning in this case, a daily view. I want to know where there's historical support and resistance on a weekly and monthly basis on any stock before I ever get involved. So tomorrow, members, with these extreme oversold stocks, we're going to be talking about the weekly, monthly charts to identify where the best risk-to-reward entry point is at historical support. We're also going to talk about the catalyst to send these stocks higher. Maybe it's high short interest. Maybe it pays a dividend. Because, brother, in an inflationary environment, which I believe that we're going to be heading into, high-yield stocks are going to do best. Forget about small caps. And that's why we are short of the Russell 2000. I digress. So we want to talk catalysts tomorrow. We want to talk historical support, and then we want to talk price targets. Where do we want to get out? These are not long-term plays. These are short-term swing trades. I want to get in. I want to book profits. I want to get out. So what we'll be using here, as always, with these extreme oversold stocks, we'll be looking at our key barometer for these stocks, and that is the RSI. We have RSI sitting at 16.56. Folks, it can go lower, especially a biotech. Now, Biogen, they reported poor late-stage trials of an Alzheimer's drug last week, and it was a key to their future. So this company has a lot of problems ahead of it. So while it doesn't look as though this stock could possibly go lower, it can, and it probably will. Take note of volume. You have institutional distribution. In all probability, folks, we are making new lower lows next week. Even if we consolidate sideways Monday, Tuesday, we're probably going to break to new weekly lows at some point in time. We do have a price target in mind. Members will talk about it tomorrow, and we will look to get long of Biogen. Stokes are still declining, so there's still more damage to be done here. We need to watch this volume dissipate. That is key. The next chart up, ABTX, Legion's Bank Shares, daily view. Now, this one here, we have RSI. Again, it's an extreme oversold stock. RSI at 17.88. It can go lower. If you read technical analysis books, like Technical Analysis for Dummies, they'll tell you to buy a stock once RSI goes below 20. You will go broke. Do not use rules of thumb like that. Now, this chart here, you can see that we formed a head and shoulders setup. Left shoulder, head, right shoulder. Here's your 45-degree neckline, and we broke on March the 19th. This is your signal. You had to get out. Learn the charts, folks. The markets send you signals. I say it all the time. Now, on Friday, we broke down below the February lows. Bearish stuff. So what we're going to be doing tomorrow is going over the weekly and perhaps monthly charts to identify where we have historical support levels, where we would feel comfortable with opening a new position. We have the possibility of a double bottom setup here on stochastics. That's pretty bullish stuff. But that doesn't mean you go buying it on Monday morning. This volume action here is telling you you have institutional distribution. Don't fight these guys. They will win. Members, more to come tomorrow on the week ahead commentary. Columbia Banking Systems, another bank. Now, this one here, we had gone over back in, I think it was back here in October. Yeah, the RSI in the doldrums back then. And we had a massive rally off the lows. Now, we have done a complete round trip. RSI at current was 14.74. Very oversold. This is good support. Is it the best support? We don't know yet. We don't have enough information. We need to use our multi-period charts. We need to take a look at the weekly and monthly charts. Volume is telling us that we have institutional sellers out there. Again, you don't want to fight these guys. So members, more tomorrow on the week ahead commentary where we'll do a deep dive into the charts of COLB. And again, I will be putting our price targets as well as our stop loss points on the watch list in the members area. So please check it out. FF, Future Fuel Corp, daily chart. Another extreme oversold stock. I've never heard of this company. I don't know the catalyst of why it's moving lower. I'll need to research that before I get involved. But this is clearly a stock in deep distress. A major break here on the 18th of March. We traded sideways, alleviating the oversold condition relative to the third and second standard deviation Bollinger Bands. On Friday, we resumed the downtrend. I like the Stokes here. They're possibly setting up for a double bottom setup, which is good stuff. And we've seen that before. History repeats itself with FF. You saw it back here, double bottom setup. You saw it back here, double bottom setup, back here, yada, yada, yada. So you get the picture. So I think the same is going to occur yet again. The question is, does this support level hold, or do we move to new lower lows? And is this, once we test the support level, which I believe that we will, is this historically the most favorable support level that we would feel most comfortable with buying at? Now, you may be looking at this chart and saying, you know, Bob, this may be a triple bottom, meaning here's test number one of the 1290 level. It's called 1290. Test number two here. So there's your double bottom, and it worked. We had a rally, right? Here would be test number three. I do not believe in triple bottoms. I simply don't. I think that they are like the mythical unicorn. I think what we're setting up for here is a continuation move lower on these shares. Volume is still very high, which lends credence to my argument. Now, ADX red could quite possibly be putting in a double top here. It's not complete yet. I do think that we are pressing lower. Members, more to come tomorrow with a little bit more analysis here, a little bit more of a deep dive into the historical charts. And of course, we'll take a look at the intraday charts as well as the week progresses to see whether or not we have the intraday price action on all of these names, which is becoming a bit more favorable. And in particular, we'll be looking at the 4-hour chart. The last chart up is CATY Bank Corp, another bank. Another one, I didn't annotate this, I'm going to do it now. Another one where we had a head and shoulders setup, and unlike the prior chart I discussed with the head and shoulders setup, we're going to go with a horizontal neckline rather than a 45-degree neckline. Okay, so again, the market sent you signals here. We broke support, completing a head and shoulders setup right here on the 19th. If you would have stopped out, if you would have had your stop below the lows of March the 15th, you would have been spared all of this drama. Now, I do believe that we are coming down here to the 3168 level. That could be support. It should be support. Is it historical support? Is it support where I would feel comfortable with putting in a limit order? Maybe. I don't know yet. I haven't done enough analysis yet on this particular chart. I will be doing it tomorrow with members on the weekend commentary. So please sign up for the 14-day free trial offer. Join us. If you're not ready to commit and join, simply click the subscribe button. Follow me on YouTube, or if you want a notification sent to your inbox, simply click on the link above or in the description area of YouTube. Enter your email address anywhere on the website. I'm sure you'll get some sort of a pop-up or whatever these guys threw on the website. Enter your email address. You get all my commentary sent directly to the inbox as soon as it is completed. Everybody enjoy the remainder of your Sunday. Members, I will talk to you tomorrow. Everybody have a great night and be well.